All right, midterms are just 2 weeks away. A new poll finds that the Dems are facing a tough fight in the key swing state of Ohio. For more, let's bring in our very own senior columnist, Rick Newman. Rick.
They're facing a lot of tough fights, and it's looking pretty clear at this point that Republicans are very likely to take back the House. The Senate might be 50-50, but to go to that Senate race in Ohio, that's where Tim Ryan, the current congressman, is facing J.D. Vance. And I mean, there you see it's tied. This is interesting because President Trump won Ohio in 2020 by a considerable margin. So in this race, the Democrat actually is outperforming. But that is not the case in some other states where, like Nevada, for example, where Democrat incumbents are in real trouble. So it looks like we're going to have divided government after the midterm elections. That is not a bad thing for markets. What it mostly means is that we're just not going to see any significant legislation during the next 2 years.
Okay, so Rick, with all the key races that we have been watching here, I mean, is there going to be any actual legislative agenda changes, any policy headway that gets made post-election?
The one thing that's gotten a lot of attention recently is Kevin McCarthy in the House, who would probably be Speaker if Republicans take the House. He has indicated that Republicans may not sign off on or easily sign off on the next extension of the federal borrowing limit. That's probably going to come up in mid to late 2023. And that means we could have one of these standoffs that we've seen before where the federal government can't borrow money. It goes right down to the wire. This type of standoff led to the downgrade of U.S. debt all the way back in 2011. So we might get another one of those. Republicans have also suggested they may not easily sign off on funding for military aid to Ukraine. McCarthy said, don't expect a blank check on that. So that's another thing to watch. But for markets, we're not going to have any tax increases. That seems very sure. We're not going to have any big new spending programs. So there is often a rally in the stock market after the midterm elections. And some people are saying maybe that'll be a little bit of something fueling a late year rally this year.
Rick, what do you think? And look, the political winds are constantly changing day to day. But what do you think is the biggest issue on the minds of voters? Is it still gas prices and heating all costs like we've been talking to you? Or is it something like just popped up recently, the federal, the loan changes to the student loan program being blocked?
This has actually shifted. So obviously the Biden administration paid a lot of attention to gas prices during the last 4 months, let's say, and Biden has been releasing oil from the strategic reserve to get that down. Gas prices are now around $3.80, which I think is okay. I think what has snuck up on Biden has been these other types of inflation. I mean, we've seen food inflation is now 13%. Moody's Analytics has a nice piece of analysis out today saying they think one of the biggest factors in midterm elections is real disposable income. And on that, so that's your paycheck after inflation. And the Biden economy is doing very poorly on real disposable income, mainly just because inflation is eating away at wage gains. So all of this makes people feel really unhappy. And when they're unhappy, they blame the incumbents. So that is one of the big reasons Biden's Democrats are probably going to take it on the chin.
You look happy, Rick. I'm happy. Brad's happy.
So happy.
Let's bring on the week. Rick Newman, thanks so much.
Bye, guys.